Hello everyone and welcome into the channel. My name is Brent and in today's video we're going to go ahead and take a look at this past week's moves on the indices and also take a look at some of the news that's coming up for this week. It's not all that great, so I do expect a bit of a rockiness here going into April, but we'll see. We'll see, right? If you guys are brand new to the channel, definitely go down below, subscribe. If you guys enjoy the content, definitely give this video a big old thumbs up and let's go ahead and get into it. So every time you guys see these little votes that I like to put out every week, go ahead and make your bets. It wasn't expected at all that there'd be no more downside after Monday's kind of euphoria pop, with tariffs not potentially being as rough as they had initially been made. It actually turned out to be pretty rough, and it got sharpened throughout the end of the week, and we ended up very much into the negative. So I had expected a bit of a rebound, which it did on Monday, Tuesday. Wednesday, it just kind of fell off a cliff very quickly, ending near the year-to-date lows. We'll go ahead and chat about that. I did put out a new voting on this week. So right now, SPY is sitting at 55.80 for the week close on Friday. I did put in here after last week's 200-day rejection, we might see a bit of a rocky week ahead of us. I'm not 100% sure what to expect. We could retest the bottom. So right now, we're not sitting quite at year-to-date lows. We're very close. We're just less than 1% off the bottom. We could break below that, which would be even worse. We could go down as far as 14% negative year-to-date from top to bottom. I'm hoping that we shoot for like a 0%, but I don't think that's going to happen with tariffs being implemented the way that they're going to be on Wednesday. So we'll chat about that here in a minute. Fear index is still showing at a 22, so not a big change there. Talking about last Friday, we did see Dow Jones down 1.69, NASDAQ down 2.7, and the S&P 500 down 1.97%. So on Friday, what this kind of consisted of was basically everything outside of utilities and healthcare was red. We saw Tesla down 3.51, Meta and Google and Amazon all in the 4%. Microsoft down 3%, Apple down 2.66, and Nvidia down 1.58. So across the board on Friday, everything was very much red. For the weekly progression, we did see Tesla being the only one of the Magnificent Seven that was actually green for the week, up nearly 6%. A lot of these sectors within the S&P 500 are actually going to be affected going into the upcoming weeks of tariffs being implemented. Utilities, not so much, right? They're primarily in the United States. I'm surprised financials got hit as hard as they did on Friday, but they're doing decent overall. So I want to go ahead and go into some of the news. Let's see if I think that's the top of the article there. So as far as like what took place Friday, the major averages fell on Friday after release of a hotter than expected personal consumption expenditures index reading. Basically, inflation gauged was a little bit higher than expected. It shows prices increased more than expected last month, rising 0.4% month over month and 2.8% year over year, continuing a stubborn plateau on the path to the Fed's 2% target. So Fed has said that they're not going to be stepping in. They're seeing progression towards their inflation rate, but often they're lagging behind. Right now, year over year inflation is a bit higher, right? 2.8%. So that kind of sparked along with the uncertainty of the market. So here we also saw US consumer sentiment for March plummeted to its lowest level since November 2022. And those I don't know, I marked this as a red, as a negative there, basically because President Trump has said he'll absolutely follow through with tariffs and levies against Canada, even though there's a lot of discussions. He always comes across as saying, hey, we had a very good talk, but there's still the uncertainty. People don't want tariffs, right? Tariffs in 2025. So stocks have been on a bit of a roller coaster this week, starting off with a high on Monday with hopes that Trump would temper his tariffs plan and abruptly diving beginning on Wednesday. So on Wednesday, there's going to be tariffs implemented on April 2nd. So that will be, Wednesday, which will go into full effect. So market continued to slide Thursday as Wall Street digested Trump's 25% levies on foreign cars against That was against Europe. And then the hawkish comments on what lies ahead in the trade war. April 2nd, the date when broad reciprocal tariffs are set to take effect, and it's looming large. So yeah, there's a lot of negative out there in the market. That's what I'm saying. I don't expect I don't expect rising prices to be transitory because tariffs are here. I don't think they're going to be going away. So I do see prices across the board as we implement tariffs and get tariffs implemented back at us. And people are the first thing that they're going to do is begin raising prices to compensate for the tariffs. So I don't see it ending very positively. I don't think that I highlighted anything else within this article here. Moving on to the next one. Sorry about the blindness there. We are going to go ahead and talk about stock futures. That was something I was taking a look at. So this article here kind of covers some U.S. stock futures fell early Monday as traders look ahead to the Liberation Day for clarity for President Trump's tariff plan. So futures tied to the Dow Jones fell 145 points. That's actually a bit further now. When I take a look at the futures right now, I don't know if let me do a quick refresh to see if anything's changed here since I brought everything up online. Yeah, we're still down 157 points in pre-markets, down 0.38%. S&P down 0.61. The Nasdaq is down 1.01%. So it looks like the Nasdaq did pull up a bit from earlier. The S&P 500. Yeah, okay, it's done. Never mind. Okay, so everything's actually a little bit further along. Yeah, stuff is continuing to kind of follow along. A slew of tariffs is set to be enacted by President Trump's administration, which will go into effect on Wednesday, Liberation Day, including a 25% tariff on all cars that are not made in the U.S. And the president also expects to announce his plan for other tariffs as well. I kind of highlighted this in yellow, kind of meaning it's not negative or positive, but Liberation Day may not be a complete shocker, right? We've known about this date. We know that President Trump wanted to enact tariffs. That was going to be a way to, however, no one wins from a trade war. You just you make conflict with allies, right? We have a lot of allies out there, but when you implement tariffs against your allies, that just kind of deteriorates those relationships. It brings you guys to the table to negotiate, but nobody ends up winning. There's always one loser, right? You don't want to be that loser, and you don't want to be that one that kind of sets the economy back a bit. So against the backdrop of mounting trade and economic concerns, the three major averages are all on pace to end the month lower. So the S&P 500 is down 6.3% for the month. The Dow Jones is poised for a 5.2% loss, and the tech-heavy Nasdaq has tanked a whopping 8.1% in the month of March. So a huge hit in the month of March. A lot of people are hoping to expect a bit of a pullback or pull up on Friday, but overseas, Japan has already opened up. I kind of popped the map open here. Oh yeah, world map right here. So here, China, Japan, we can see all the indexes over that way are very much in the negative here, kind of starting off the day. So we'll cover the article here in just a second once again. I'm going to let this kind of sit. Yeah, they opened up. They're kind of plunging there on the indexes. That is our pre-market. The only thing that I saw being green potentially is gold price. I did see silver also pop to a new all-time high. So if we bring up silver price and gold price, let me go ahead and bring up silver right now. Silver is trading at $35.16 for the spot price, which is now near an all-time high. I believe the all-time high there was $35.46, plus or minus a bit, but definitely interesting. A lot of gold and silver is beginning to kind of pop here. We can kind of see gold is sitting. I was checking gold out earlier. It's now hit an all-time high of $3,129 per ounce. So yeah, that is a new one on me. It was in the $3,000 range earlier today when I had checked it. I was taking a look at it. So it has definitely slid quite a bit. So a lot of investors are kind of flight to safety for bonds and gold hitting record highs. So the European Union was ready to respond with its own tariffs, as I had said. We are going to implement tariffs. They're going to implement tariffs. It's never, it's never ends too well there for either side. If the policy chaos and trade war worsens much further, a recession is now a realistic risk across major economies. He added, for the first time in many quarters, we favor core fixed income over global equities. So a lot of investors are kind of moving to those fixed kind of income style portfolios versus being invested in direct markets where it has a lot of volatility. As we saw Asia losing an eye-watering 4.1% to a 6-month low as automaker stocks continue to suffer fallout over the talks of 25% tariffs being stuck on imported cars. So there's a lot of that. So recession risks have also been elevated to a 40% probability on concerns of aggressive US policies hit businesses and household sentiment. This is from Bruce from JP Morgan. With latest tariff increases set to push US core inflation above 4% next quarter, a household sector with a healthy balance will need to show a willingness to lower its savings rate to cushion this blow. So as prices are expected to increase even further than what they are. Prices are going to be raised against other countries. They're going to in return impact, raise tariffs against us as well. We have a lot of imports here in the US. So yeah, they had seen a 35% chance of recession from 20% previously. Now it's at 40%. So as long as this kind of continues to play on, it's going to continue to be very negative for the market. So yeah, I do see, I would like to see a 0% kind of trend sideways as we retest this. Let's go ahead and bring this up. I'll go ahead and add SPY in here instead of VU. I feel like, and then we'll take a look here. So SPY ended up moving past 52-week average, sorry, the 200-day moving average in early because of Monday. Monday pushed the S&P 500 above that 200-day moving average, which was positive there for the week. And going forward, you saw that the recovery process did take several weeks here. It took, 1 week here, 1 week there. Here on Monday, we were moving up. So it took 2 weeks and then some of moving, kind of upwards in a sideways trend. And then to break above that 200-day moving average. But with tariffs being in that uncertainty, and there was a bit of a pullback, not pullback, but there was a bit of a green push there because it looked like tariffs were going to be a bit eased. They weren't going to be as hard initially as they had initially been set, but that was not the case. President Trump said, no, we're going to go ahead and go with it on Wednesday. It's going to be even worse, right? They're going to be implementing additional tariffs on automakers and pharmaceuticals in the future. That hasn't been completely worked out on the pharmaceutical side, but 25% tariffs on automakers. So as of that point, it just kind of plummeted very quickly. So what took 2 weeks to move took just a few days to lose. And here we're not quite at those year-to-date lows, but we're very, very close here. If we take a look at year-to-date here, you can see here just kind of dropping off a cliff. We're not too far. We're less than a percentage away from lows. So as I said, on this week could really play out. Wednesday is going to be as we implement tariffs, and we might have some fallback out of that. We could actually end up at a lower low, losing as much as 14% from highs to low. That's kind of the next fall line. So if we do go below our recent low, we'll probably end up dropping from top to bottom roughly 14%, I think is what February 25, 26. I don't think it was 26. I think it was 19. I think I need to go back one more week. So here we are from highs. If I go to the 18th, I think 19th was the high. Yeah, so 19th was the high right here. And if we take a look at percentages, how much it's fallen, whoops, I want price. From top to bottom, that point right here was down 10 point some percent, putting us into that correction territory. We're sitting less than 1% away from it. So these tariffs being implemented here on Wednesday could set the market below the prior low. And if it just continues from then on, we could see the next check, I believe, would be about 14% to the negative. So that is the S&P 500. Let's go ahead. We'll take a look at the Dow Jones. The Dow Jones actually broke above that 200-day moving average as well on Monday and Tuesday and actually did really well. But throughout the week, they just couldn't keep it, right? Dow Jones not being as tech heavy with those technology stocks, with tariffs being implemented against automobiles. Tesla's like the only automobile that's fully built 100% in the US. I think some of the other manufacturers still do some parts, and I don't have it on both my screen now, but I believe they're going to be hit as well. So there's still a lot of businesses within Dow Jones that are going to be affected. So it did drop below that 200-day moving average. It's not quite as low near its recent lows back in mid-March, but we'll see. The QQQ, the NASDAQ, didn't break above that 200-day average. It did hit it and then get rejected very quickly. So all that 2-in-a-day progress to make it back up to that 200-day moving average took just 2 days or so to completely fall apart. And this one actually broke below, I can't see that percentage right there, but I believe the NASDAQ is actually down percentage-wise below where it had been. So here we can see it's down 13.08%, actually putting it below its recent lows. And if we go back to February 1st, we'll see here, let's go ahead and get rid of these. We'll just take a look at their percent for the month. We see that the NASDAQ is down in correction territory, down 10.21%. So the article here, where is it? That's not it. I was taking a look at one for the month. So we were kind of looking at one that said for the month. So S&P is down 6.3. So the S&P 500 is actually down for the month roughly 6.68%. Oh no, here it is. So S&P 500 is purple. Purple is down 7.67% for the week, for the month. The Dow Jones is orange, down 6.68%, and the NASDAQ is down 10.21%. So that's a bit lower than what these are showing for the month. So I think this article came out on Friday. It came out Sunday. So maybe they're expecting when they wrote this article that there'd be a bit of a pullback, a bounce on Monday, but it's not. It may not happen. So yeah, I think that's all I kind of want to chat about here in this video. I don't see it being very positive this week. As much as I'd like to say, hey, it's going to be a great day, it's going to be a great week, I don't believe so. I did want to go ahead and mention I have switched my portfolio around quite a bit, and I did get my bonuses for the month of when I signed up with Schwab. So I signed up with Schwab. I split my investments between my account, my wife's account. Each of our accounts were able to get that promotion of $500 each by depositing over $100,000 between accounts. So we made the investments here, and then I had swapped a lot of my portfolio from SPY into SPYI because I recently got laid off. I don't have any W-2 income, so I'm able to generate income through the portfolio while it is losing a bit in the short term through the volatility. It is able to get paid out on a monthly basis, and if I don't need the capital, the full amount, I'm able to reinvest that capital for buying back more shares. So if the market does recover, it'll do well. So in the month of March, from this portfolio alone, or the three portfolios, this is a Fidelity account. I'm also testing Fidelity as well, but I don't want to put that much cash into that one right away. So we do have a Fidelity account, my account, and my wife's account. And between the Fidelity accounts on the SPYI, they generate $2,772.19 in dividends. And then we got that promotional bonus between our both of our accounts, which was $1,000. So between the promotional bonuses and the dividends for the month of March, we were able to generate $3,772.19. So that was a bit of a win there as well. I post quite a bit. I've been trying to bring back everything as far as my socials go, posting a lot more on YouTube, posting more on Instagram and Threads and Facebook. So if you guys are not following me yet over on Instagram or Threads, or checking out my posts over on YouTube, definitely check them out. Would really appreciate it. So I think that's going to be it for today's video. I do appreciate everyone who has tuned into the video. Drop me a comment down below. I don't get a lot of comments, so if you guys have a specific question or just want to say hello, drop me a comment down below and let me know what you guys are buying, not buying, kind of holding steady. And that is it. Remember to go down below, subscribe to the channel, give this video a big ol' thumbs up, and I hope you guys have a great week ahead of you. And don't be disappointed if it is red, but let's hope for some green, right? All right, bye-bye.